Well, let's get a reaction from south of the border to this preliminary trade agreement between Canada and the US. The sides agreeing to ratchet back tariffs on EVs on Canada's side, and the Chinese agreeing to reduce levies on Canadian agricultural exports. We are joined by Sam Stovall, Chief Investment Strategist at CFRA. Sam, it's great to have you here to give us a US perspective. I don't think we've seen reaction from the White House here, but Canada's certainly breaking with the Americans to some extent on bringing in the EVs at a levy of just over 6%.
Well, that's right, Andrew. And I think you brought up an interesting point, that concern in Canada that just the cars will be allowed to come in rather than plants being constructed within Canada. When President Trump was talking to the United Auto Workers in Detroit recently, he was asked a question about opening a foothold to the Chinese EVs in the U.S. And he said, well, so long as they're willing to build plants, hire American workers, then he said he's open to it. So I think we'll have to wait to see what actually transpires.
Yeah, we've heard from participants in the auto parts industry here in the past that the Chinese have not been receptive to opening factories here in Canada. But of course, we can assume talks are going on to try to bring them in. It will be frustrating, though, I suppose, for the White House, the administration, if Canada isn't presenting a united front to China on this issue.
Well, that's true. Certainly, the U.S. is trying to create its own buffer by acquiring Greenland and keeping China and Russia at bay, when actually what we could find out is that the Chinese are right at the 49th parallel. So we'll see what actually transpires.
But you think it's understandable that Ottawa has had a hard time on trade from the Trump administration. Mr. Trump the other day said, we don't need cars made in Canada. So you think it's perhaps not entirely surprising Mr. Carney would seek a deal with Beijing here?
No, it's not. I think that the Canadians and Americans have traded very well together over these many decades, and so to end up having your primary trade partner then decide that the relationship doesn't work and that it's over causes one to not be surprised that they then turn to their second largest trade partner, which is China. And so it is a disappointment, certainly, I think, on both sides of the border.
Let's turn to the markets. Intel is on your radar right now. What are the implications, possibly, of Taiwan Semi, the global giant, rapidly increasing its capital spending?
Well, Intel, which we have ranked hold at this point, certainly is not the leadership company that it was back in the 2000 era. And now with Taiwan Semi looking to build factories in the U.S. to establish its own foundry business, that is a negative for Intel, in our opinion, because now it has to compete with Taiwan Semiconductors here in the U.S. For companies that are looking to buy chips.
Yeah, it's interesting. Intel, of course, just remind us, I mean, do they have any kind of strength in AI devices?
Just minor things, but working in that direction. They did indicate recently that their Core Ultra Series 3 processors are making their first AI PC platform built in the U.S. And so, in a sense, they are making some minor steps into that area.
The January so far, pretty good for the markets, and that tends to be historically a good omen for the full year.
Oh, it absolutely does. Every year going back to World War II, on average, the S&P gained 9.3% and was higher 72% of the time. However, whenever we started the year with a positive January, the S&P gained more than 16% and was higher 86% of the time. So obviously not a guarantee, but a fairly positive way to start the year. What is, or at least has been a guarantee, is if the first quarter low did not undercut the prior December low, then the S&P was higher for the full year 100% of the time.
But midterm election years can be choppy and unpredictable?
I think that's an understatement, Andrew. It is by far the worst performing year in terms of average annual
Oh.
performance, up only 3.8% since World War II, rising just 55% of the time. So really no better than a coin toss. And the average annual drawdown is the highest at 18%. So fasten your safety belts.
The meteoric rise in gold, is that in some ways an ominous sign that people are worried about a possible debasement of the US currency, for example?
I think it's a combination of concerns about just geopolitical tensions and central bankers because of the tariff situation saying, maybe we're better off holding gold than we are holding U.S. treasuries. Also, with the value of the dollar coming down, and since gold is priced in dollars, then that makes it more affordable to overseas investors. And it is a store of value. So a place where investors can put their money if they are very uncertain about the future.
Sam, I think we better jump. Thank you very much indeed for joining us.
Always good to talk to you.
Sam Stovall, Chief Investment Strategist at CFRA.